Hello and welcome to our channel where we discuss important financial topics that can help you make better investment decisions. In today's video, we'll be discussing ETFs and mutual funds, and which investment option is better for you. ETFs and mutual funds are both investment vehicles that pool money from multiple investors to invest in a diversified portfolio of assets. ETFs, or exchange-traded funds, are securities that track an index or a basket of assets and are traded on stock exchanges. On the other hand, mutual funds are professionally managed investment vehicles that invest in a variety of assets such as stocks, bonds, and other securities. Now let's take a closer look at the advantages and disadvantages of ETFs and mutual funds. Cost. ETFs generally have lower expense ratios than mutual funds, which means you pay less in fees. This is because ETFs are typically passively managed and don't require as much oversight as actively managed mutual funds. Additionally, ETFs tend to have lower transaction costs since they can be bought and sold like individual stocks. However, it's important to note that some mutual funds, especially index funds, can also have low expense ratios. Trading flexibility. ETFs offer trading flexibility since they are traded on stock exchanges, allowing you to buy and sell them throughout the trading day at market prices. This gives you more control over your investments and allows you to react quickly to market changes. Mutual funds, on the other hand, are priced once a day after the market closes, which means you won't know the exact price of your investment until the end of the day. This can result in missed opportunities or higher transaction costs if you need to buy or sell shares. Diversification. Both ETFs and mutual funds offer the diversification, which is the practice of investing in a variety of assets to reduce risk. However, ETFs tend to be more tax efficient due to their structure, which can help to minimize capital gains taxes. ETFs also have the advantage of being more transparent since they disclose their holdings on a daily basis, while mutual funds only disclose their holdings quarterly. This can make it easier for investors to understand what they are investing in and make informed decisions. Minimum investment. Mutual funds typically have higher minimum investment requirements compared to ETFs, which means you need to have a larger amount of money to start investing. This can be a barrier for new investors who don't have a lot of money to invest. ETFs, on the other hand, have lower minimum investment requirements, which can make them more accessible to a wider range of investors. Professional management. Mutual funds are typically actively managed by professional fund managers who try to outperform the market by selecting individual stocks and bonds. This can result in higher fees, but it can also potentially lead to higher returns if the fund manager is skilled. ETFs, on the other hand, are typically passively managed and simply track an index, which means they don't require as much oversight and have lower fees. While this can result in lower returns, it can also be a good option for investors who want to keep their costs low and don't want to take on the risks associated with active management. Liquidity. ETFs are more liquid than mutual funds, which means it is easier to buy and sell them because they trade like stocks. Mutual funds, on the other hand, have to be redeemed directly with the fund company, which can take a few days to process. Trading costs. ETFs tend to have lower trading costs than mutual funds because they are bought and sold like stocks. Mutual funds, on the other hand, may have additional costs, such as redemption fees or sales loads, which can eat into your returns. Accessibility. ETFs can be accessed through a brokerage account, which means you can easily buy and sell them online. Mutual funds, on the other hand, may require you to open an account directly with the fund company or through a financial advisor. Risk. Both ETFs and mutual funds carry risks associated with the underlying assets they invest in. However, actively managed mutual funds may take on more risks due to their investment strategies, while passive ETFs tend to have a lower risk profile. Performance. Both ETFs and mutual funds can perform well or poorly depending on the market conditions and the underlying assets they invest in. Some investors prefer ETFs because they have a lower expense ratio, which can help to boost returns over the long term. However, other investors prefer mutual funds because they offer the potential for higher returns due to professional management and active trading. Tax efficiency. ETFs tend to be more tax efficient than mutual funds due to their structure. ETFs generally have lower capital gains distributions because of their indexing approach, which can help to reduce the tax burden on investors. Mutual funds, on the other hand, may generate more capital gains distributions and require investors to pay more in taxes. Investment strategy. ETFs are often used for tactical asset allocation and short-term trading strategies, while mutual funds are more commonly used for strategic asset allocation and long-term investing. This is because ETFs are designed to be traded like stocks, while mutual funds are designed to be held for longer periods of time. Transparency. ETFs are more transparent than mutual funds because they disclose their holdings on a daily basis. This can help investors make informed decisions and understand the risks associated with their investments. Mutual funds, on the other hand, only disclose their holdings quarterly, which can make it harder for investors to understand the risks associated with their investments. Conclusion. So, which one should you choose? It ultimately depends on your investment goals, risk tolerance, and personal preferences. ETFs may be a better option if you want lower fees, trading flexibility, tax efficiency, liquidity, accessibility, a lower risk profile, and prefer to engage in short-term trading strategies. Mutual funds may be a better option if you're looking for actively managed funds and are willing to pay higher fees for professional management, potentially higher returns, and prefer to engage in long-term investing strategies. It's important to do your research and compare the fees, performance, and other factors of different ETFs and mutual funds before making a decision. That's all for today's video on ETFs versus mutual funds. We hope you found it informative and helpful. If you have any questions or comments, please leave them in the comment section below. Don't forget to subscribe to our channel for more investing and finance content. Thanks for watching.